When Warren Buffett starts retreating from the market, it's not just a personal choice, it's a signal. One of the most disciplined value investors alive is stepping back.
The dollar is falling. The empire is fading. But your voice is rising. Don't just watch history happen. Be part of it. Why have you checkmark subscribe to this channel for more fearless analysis from Richard Wolff and voices the mainstream media refuses to platform?
Not because of a lack of cash, but because the market no longer reflects value. Traditional metrics are screaming overvaluation, yet prices keep climbing. What's holding the system up isn't growth or productivity. It's a fragile scaffolding built from deficit spending, manipulated liquidity, and a tightly controlled narrative. Beneath the surface, asset prices are being propped up by artificial mechanisms designed to delay collapse and extract as much wealth as possible before the inevitable unraveling. This is a free market. It's a managed structure where policy overrides fundamentals and crashes are timed, not triggered. The tools are hidden in plain sight. Quantitative easing, dark pools, algorithmic trades, and a media environment that disguises engineered outcomes as economic resilience. The longer this illusion holds, the more severe the fallout when it breaks. And it will break, not by accident, but by design, when it suits those who stand to profit from a crash. Understanding this shift from organic markets to controlled systems is key to recognizing what's coming and preparing for what happens next. The stock market isn't standing strong because the economy is healthy. It's standing because it's being held up. The foundation underneath it is rotting, but from the outside, everything still looks intact. What most people don't realize is that this market is no longer a reflection of free market capitalism. It's a stage-managed performance, kept alive through coordinated manipulation, artificial liquidity, and a relentless cycle of deception, designed not to build wealth for the public, but to siphon it upward. For years, the narrative has been the same. If the stock market is rising, things must be fine. But that's not reality. That's propaganda. The current bull market defies all traditional logic. It doesn't match productivity. It doesn't reflect true corporate earnings. It doesn't even follow the rules of basic valuation anymore. The Buffett indicator, which compares total market cap to GDP, is flashing red at 216%. That's not healthy. That's historically extreme. Price-to-earnings ratios are distorted beyond reason. Every honest metric that used a signal value now screams overvaluation. But none of it matters anymore because the market doesn't respond to fundamentals. It responds to manipulation. The fuel for this illusion is artificial. Deficit spending has exploded. Inflation has been deliberately stoked. And every time a crack starts to show, the same playbook gets rolled out. Quantitative easing, interest rate suppression, and coordinated market support. These are not tools for economic growth. They're tools for asset inflation. Tools to push money into the markets, not because the companies are worth more, but because dollars are worth less. And it's not just the Federal. It's not just the Treasury. This is system-wide. The use of dark pools, high-frequency trading algorithms, and off-exchange venues allows large institutions to move billions without public transparency. These mechanisms distort price discovery. They conceal market stress. They engineer volume, momentum, and direction. They're not part of a free market. They are tools of control. Even the most respected investors have had enough. Warren Buffett, the king of value investing, is sitting on record levels of cash. That's not a vote of confidence. That's a signal. When someone who built his empire on disciplined fundamentals starts pulling back from the market, it's because he knows those fundamentals no longer matter. The market has become a rigged game, and he's not willing to play it. This isn't a conspiracy theory. It's a strategic transformation. The market has been repurposed. It's no longer about allocating capital to productive ventures. It's about wealth consolidation. It's about keeping the illusion alive just long enough for those at the top to maximize their position. And when the time comes, when the upside no longer outweighs the cost, they will let it fall. Not because they failed to prevent it, but because they chose to allow it. That collapse will not be accidental. It will be timed. The triggers are already in play. Loss of institutional trust, social unrest, geopolitical realignment, and the slow erosion of dollar dominance. Any one of these could spark a loss of faith. And once faith is gone, the system unravels. Because the only thing propping up this market is belief. Not earnings, not productivity, not innovation, just belief. And when belief breaks, the crash begins. But this isn't just about market prices. This is about how the entire system has been constructed. Inflation is not just rising, it's been used. The dollar has been quietly debased by policy. And while most people are feeling the squeeze at the grocery store and the gas pump, the wealthy are pouring that cheap money into assets, real estate, equities, gold, anything but cash, because they know what's happening. They know this isn't temporary. They know the only way to survive inflation is to own the assets being inflated. So while the average person is watching their paycheck shrink in real terms, the elite are watching their portfolios inflate, thanks to the same policies that are draining everyone else. It's not incompetence. It's not mismanagement. It's design. This is why traditional valuation models have become obsolete. When the money supply expands faster than productivity, when interest rates are artificially suppressed, and when asset prices are the target, not the result of policy, then metrics like price to earnings and forward guidance become irrelevant. The only thing that matters is policy direction, what the Fed says, what Congress spends, what the Treasury monetizes. This is not capitalism. This is central planning dressed up as free enterprise. And now, even geopolitical strategy has been baked into the markets. The U.S. runs massive strategic deficits not just to fund domestic spending, but to maintain global financial dominance. It weaponizes the dollar, forcing international demand through trade and reserves. That demand keeps asset prices high. It masks domestic weakness. But it's also cracking. Other nations are building parallel systems, creating alternatives to SWIFT, trading in yuan, rubles, gold-backed contracts. The dollar is still dominant, but the challenge is growing. And the moment that dominance weakens, the entire leverage structure of a U.S. financial system becomes vulnerable. Because without reserve currency status, the U.S. can't export inflation. It can't finance unlimited deficits. It can't artificially inflate its stock market with no consequence. And when that day comes, the real value of these assets will have to be repriced. That's the real risk, not a market correction, not a technical recession, but a systemic revaluation of everything priced in dollars. And still, Wall Street plays along, not because they believe in the system, but because they're trapped. They're locked into benchmarks, performance reviews, and career incentives that require participation. If you're a fund manager and you sit on cash while the S&P goes up 15%, you get fired. Even if you know the market is broken. Even if you know the prices are fake. So they keep feeding the system. They buy the dips. They front-run the Federal. They do what they must to survive. But they all know, the system is rotten. And the media, completely captured. Cable news runs segments on record highs without mentioning how much of that growth is just inflation. Business networks parrot Federal Reserve talking points like scripture. Economists from elite universities reinforce the illusion with models that no longer apply to the real world. It's not information, it's narrative management, designed to keep retail money flowing in long after professionals have quietly stepped aside. Because the truth is, this collapse isn't something to be avoided. It's something to be used. When those in control determine it's more profitable to crash the system than sustain it, that's exactly what they'll do. It won't be a surprise to them. It'll be a strategy. They'll be positioned in shorts, in commodities, in physical assets. They'll hold cash just long enough to buy the bottom. And everyone else, the public, the passive investors, the pension funds, will be left holding the bag. This isn't speculation. It's the logical conclusion of a system that's been pushed beyond its limits. A system where debt is infinite, valuations are disconnected, and power is concentrated in the hands of those who benefit most from controlled demolition. And while the public argues over political sideshows and manufactured culture wars, the financial war continues quietly in the background. The greatest wealth transfer in history isn't coming. It's already happening. If you've watched this far, you're not just here for headlines. You see it. You know something's wrong. And you understand that this market isn't going to end with a whimper. It's going to end with a strategic decision. When the people who built this house of cards decide it's more profitable to knock it down than to keep it propped up. If this made you think differently, hit the like button. It helps expose this message. Share it with someone still watching CNBC like it's gospel. Leave a comment with your thoughts, what you're doing, what you're seeing, what you're preparing for. And subscribe if you want to go deeper into mechanics behind the market's greatest illusion, because this story isn't over. The real crash hasn't happened yet. And when it does, it won't be by accident. It'll be by design. The system you think you're investing in no longer exists. This isn't your father's stock market. It's not a place where long-term investors are rewarded for identifying value. It's not about earnings, innovation, or growth potential. It's a simulation, kept alive by cheap money, artificial liquidity, and coordinated manipulation. And the longer it runs, the more detached it becomes from the real economy underneath it. Right now, stock prices are soaring while people are drowning in debt, struggling with inflation, and watching real wages stagnate. Corporate valuations have exploded, but productivity hasn't. GDP is crawling while markets are sprinting. That gap, the distance between market price and economic reality, isn't just an anomaly. It's a warning, a signal, a flashing red alert that says, this isn't sustainable. And yet it's sustained. Why? Because those who control the system need it to look stable. Not be stable, look stable. The illusion is everything. As long as the indexes are green and the headlines sound upbeat, the public stays calm. No panic, no sell-offs, no questions. Just passive inflows into index funds, 401(k)s, ETFs. That's the trap. The engineered calm before the engineered storm. The reality is that this market is being propped up by pillars that aren't just unstable, they're fraudulent. Start with government spending. We're not talking about fiscal responsibility. We're talking about monetized deficits. The government borrows trillions, and the central bank prints the money to buy that debt. That process injects liquidity into the system, artificially boosting asset prices. It's not a byproduct of policy. It is the policy. Keep printing, keep spending, keep inflating. But inflation doesn't affect everyone equally. For the average person, it means higher prices. For the top 1%, it means higher asset values. Stocks, real estate, luxury goods, they all inflate, but wages don't. And that's by design. The people who write the rules benefit from the inflation they pretend to fight. And when inflation gets too hot, the Fed steps in with its other tool, rate hikes. But even that's part of the illusion, because every rate hike brings us closer to breaking the system. Higher rates mean higher debt servicing costs. That puts more pressure on the Treasury, more borrowing, more instability. And then what? The pivot. The Fed cuts again. Liquidity returns. The cycle repeats. It's not strategy. It's survival. And the financial media? They don't challenge this. They amplify it. They exist to maintain confidence, not to tell the truth. Their job is to justify the manipulation, to normalize the absurd. One day it's soft landing. The next it's higher for longer. And then it's back to don't fight the federal. It's not analysis. It's narrative. And the narrative is simple. Don't worry. Keep buying. Trust the system. But the system is broken. The mechanisms of the market no longer reflect value. They reflect control. High-frequency trading algorithms front-run retail orders by milliseconds to skim profits. Dark pools allow institutions to trade massive volumes without moving the public market. Coordinated bailouts prevent natural corrections. And quantitative easing injects money directly into asset bubbles while bypassing the real economy. That's not capitalism. That's market socialism for the elite. And even professional investors know it. The so-called smart money isn't trying to beat the market anymore. They're trying to survive it. They're playing a game where the rules change constantly, where fundamentals don't matter, and where price is dictated by central bank policy, not market dynamics. But they can't speak up. They're trapped. Because if you manage money and you tell your clients the truth, that the market is fake and the risks are extreme, you lose those clients. If you underperform a manipulated benchmark, you lose your job. The incentives force compliance. Participation becomes mandatory. And that's how the trap Get set. It's not just the managers. It's the entire structure. The indexes are dominated by a handful of megacaps. Trillions flow into passive vehicles that don't question value. They just buy whatever the index tells them to buy. That creates a feedback loop. More inflows mean higher prices, which attract more inflows. It looks like strength, but it's just reflexive distortion. And when the illusion breaks, that's when the reflex reverses. Selling begets selling. Liquidity evaporates. And the same mechanisms that inflated prices on the way up accelerate the collapse on the way down. But that collapse won't happen randomly. It won't be triggered by a poor earnings report or a disappointing GDP print. It will happen when the people who control the game decide it's time. That's the most important truth. The coming crash won't be a failure. It'll be a choice. Because markets don't move on fundamentals anymore. They move on confidence. And when confidence becomes more costly to maintain than it is to destroy, the destruction becomes policy. That moment, when collapse becomes more profitable than stability, is when the floor will drop. The trigger could be anything. A geopolitical event, a failed treasury auction, a cyber attack, social unrest, loss of faith in the dollar. These aren't black swans. They're strategic options for those who want to reset the system on their terms. And when it happens, it will happen fast. Liquidity disappears in an instant. Halts are triggered. Market makers step away. Retail traders are locked out. And by the time the dust settles, the wealth transfer will be complete. That's why preparation isn't about predicting the date. It's about recognizing the inevitability. This market cannot survive without manipulation. It cannot return to reality without collapse. And it cannot serve the public while being controlled by private interests. The longer the illusion is sustained, the greater the damage when it finally ends. So the question is, what are you doing now? Are you sitting in passive funds, trusting a system designed to fail on your watch? Are you still listening to analysts who told you inflation was transitory? Are you hoping the Fed will save you when the next crisis hits? Or are you building something real? Because those who understand what's coming are already moving. They're rotating out of dollar-denominated assets. They're holding physical gold. They're stacking Bitcoin, not for short-term gains, but to escape counterparty risk. They're building liquidity, cutting leverage, and disconnecting from a system they know won't be there when they need it. And they're doing it quietly. Because when this crash hits, it's not just going to wipe out portfolios. It's going to wipe out trust. Trust in the markets. Trust in the federal trust in institutions. That trust won't come back. Not in this generation. Not after the next wave of retirees see their pensions gutted. Not after families see their savings evaporate while billionaires front-run the collapse with insider protection. And let's be honest, it won't matter how much you believe in the system if the system was never built for you. It was built to extract value from your time, your labor, your savings, your retirement, all while using the illusion of growth to keep you invested emotionally and financially in a machine designed to enrich the few at the cost of the many. But now the machine is overheating. It's devouring itself. The debt is unpayable. The monetary policy tools are exhausted. The social fabric is fraying. And the global balance of power is shifting. All of that points to one thing. A reset is coming. Not a reset you'll vote on. Not one the media will warn you about. A reset executed from the top down, disguised as a crisis, and used to impose a new set of rules. Rules that will once again benefit the same people who set fire to the old ones. You can either be prepared for that moment or be consumed by it. This isn't fear-mongering. It's just a part of the story no one wants to say out loud. The people pulling the strings at the top already know what's coming. They've insulated themselves with real assets, political influence, and offshore accounts. When the collapse hits, they won't be scrambling. They'll be executing trades, executing emergency meetings, executing control. Meanwhile, regular people, the ones who worked, saved, and trusted the system, will be left holding the bag. Again, this is how the game works. Manufacture growth through manipulation. Convince the public to pour in their capital. Keep the illusion alive with media mouthpieces and academic gatekeepers. And when it all becomes too unstable, pull the rug, let the correction wipe out the middle class, then sweep in, buy everything at fire sale prices, and rebuild the same corrupt structure from the ashes. It's not a market cycle. It's a wealth transfer, over and over again. And the reason it keeps happening is simple. Most people never see it coming. They trust the headlines. They think the green numbers mean progress. They believe the system works because they need to believe it works. Because the alternative, that the market is rigged and always has been, is too painful to accept. But denial won't protect your portfolio. Blind faith won't shield your retirement. The system doesn't care what you believe. It only cares what you hold. That's why now is the time to act. Not react, act. While there's still time, start asking hard questions. Start looking at your exposure. Start protecting your capital. Because when the next crisis hits, the rules will change overnight. The exits will close. And the people who trusted too long will be the ones who lose the most. If you made it this far, you already know something's wrong. You don't need another pep talk about resilience. You need facts. You need clarity. You need strategy. So share this message with people who still think this is just the usual cycle. Leave a comment if you're seeing cracks too. Like the video if you're tired of being lied to. And subscribe if you want the truth, raw, unfiltered, and unapologetic. Because the system won't warn you. But we just did.